mutual fund sector may not be totting up stellar returns, but the asset management companies are changing hands at a fast pace. The latest is L&T Finance's purchase of Fidelity's India operations, a deal that was first reported right here on ET Now on Tuesday. So what does this transaction really mean for investors in Fidelity's Indian funds? They've been mute spectators so far and have not seen any windfall returns as well. Dhirendra joins us live on the show as always to throw some light on such investors and what should they be doing. Dhirendra, first up, the worst hit are investors really in such a scenario. What should fund holders in Fidelity schemes be doing?
No, they are not hit in manner of speaking, or the reality is that fund investors are not hit. But yes, it has caused a great deal of anxiety, and a lot of investors actually bought into the process or what was being told to them that what Fidelity does, and there is a likelihood that there could be continuity there. But the investment management people, and particularly the area in which Fidelity has been able to make a credible name over the past 6-7 years, it has existed in India, which is the equity fund implementing a process, a bottom-up approach. I think that needs investors should be watchful. I don't think Indian investors into Fidelity funds are hurt in any manner. So far, they have experienced they have nice experience from Fidelity equity funds. In fact, 4 of their prominent funds, which account for bulk of their assets, they have been able to deliver a superior performance relative to other funds in the same category. And that might prevail. What Fidelity and L&T people informed me yesterday, that the fund managers will continue as long as they are needed, till L&T is able to find a way to a smooth transition and have their own set of people managing those equity funds. So Fidelity fund managers won't be there over a long period of time, but they are there for now. They provide the continuity. So I don't think investors are hurt, but yes, Fidelity will change, and a lot of investors bought into the Fidelity brand, understanding or the process or all the things they were told, which will not be the case in future.
Dhirendra, hi, afternoon. Now, Fidelity bought in international fund management practices to India as well via these funds. Do you see that core competence getting diluted now because of the change in ownership?
Maybe not. It depends. Because some of the fiduciary dimensions which was brought by Fidelity, I think that has to prevail, and that should be there in any good asset management company. Because asset management company is a fairly unique business, that you have 2 set of stakeholders to address to. One is the shareholders of the AMC, who are in there to make money from managing the money of other people. And fund manager, and it's striking this balance that fund managers are supposed to function in the best interest of their investors, who are the investors in the fund. And striking this balance is important. Regulatory framework drives you to a great deal, but beyond a point, it has to be internalized. And I think if L&T is putting some serious money into the business, they better get committed to it, and I don't think there will be any issue there. But yes, what we have, what Fidelity brought, there could be, change in the way things are being done. I think the bright spot only, which we can see in this whole transaction, is that there will be continuity of the management. Even if the fund managers go, all the business people, all the key people who will be managing the business, they are still, all the people from Fidelity will be there.
Right, Dhirendra, but the big question still remains: what made Fidelity sell off its India operations? Globally, they're doing pretty well. India is supposed to be a high-growth market. Did over-regulation kill the fund management industry, according to you here?
I think variety of reasons. One is that they just gave up because they thought that given they were anyway in the state of stabilizing the business, and the regulatory change, I think it drove the whole thinking that it will be for the long haul, and they may not be able to make money for a long period of time. The other thing was the regulatory intensity. It requires a lot of attention to, maybe it was not worth their while, given the scale of the Indian business, to be giving attention to that. I think the other reason was, some of the procedures mandated or dictated by the regulators they could not reconcile with those. For example, there were few processes which was process which was unique to Fidelity, that their transaction get executed from there. The regulator enforcing that it has to become, for the domestic fund, it has to be resident in India, or it has to be in the Indian territory. So I think processes, the scale of business, and the bleak outlook, I think the combination of things made their exit. And I think it is greatly disappointing that one of the largest players finding India an unattractive place to continue their business.
So L&T Finance now becomes a very serious player in the mutual fund Indian market. It is both hefty, or rather both AUMs as well, and hefty ones at that. The problem is that it has a mishmash of funds right now, some from Chola and now these from Fidelity as well. So do you see a clear-cut strategy at L&T Finance mutual fund business that they will adopt now?
Yes, they will have the management bandwidth, as all other people coming from Fidelity will only strengthen that. I think in recent times they have also beefed their own management capability on the asset management front. They were only getting their act together, and I think they were a very small, tiny player, and they become a serious player. And going by the complexion of asset, whatever be the asset tally in terms of they are the 13th largest, but going by the complexion of player, they will have 6,500 crore equity assets and some credible performance. I think it will be extremely important, and I'm very hopeful that L&T has all the variables of being a professional company. The other is that I think a domestic Indian company has in financial services, what I have seen in all other businesses, whether it be consumer goods, car, or all other consumer oriented businesses, I think foreigners have been able to make a great place and great name, or the market share. They have been able to drive or be a prominent player there, not in financial services. When I look at all the sub-segments of that, and I think that has something to do with Indianization of the financial services, or the connect with investors at appropriate price point, which I think Indian businesses have been able to do much better.
Dhirendra, very quickly, a quick query from an aggrieved investor. Pratap Deshmukh, an investor from New Delhi, says Fidelity has made a very irresponsible decision to sell the assets to a company whose investment record is poor. He says that he can see none of L&T's funds are being rated higher than 3 stars by Value Research, and so the only option that he's left with right now is to sell his Fidelity investment and invest in a better fund. Is that the right thing to do, Dhirendra?
No, I think he should worry about himself. There is going to be continuity of fund manager for a while. Be watchful and don't act in a haste. I would suggest that if he has to, he should be watchful. But if he has to, worry about your tax incidents and other things. I don't think there is anything in the deal that should drive you to panic. Of course, there is going to be a change, and there is a great possibility that the fund managers won't be there 1.5 years from now.
Okay, Dhirendra, good to have you on the show.